evening, good evening, good evening, everybody. How everybody doing, man? I see y'all pulling up in here. I didn't get a chance to set up my live stream earlier. Kind of a last minute thing. Hands a little sore. Was out there checking the oil and changing the headlight on Calandra car a few minutes ago. And you know, them new cars, you gotta squeeze your hand all behind stuff to do stuff. I ain't have my gloves on, so my hands all scraped up on that metal. But that ain't why y'all tapped in, man. Y'all tapped in to see if the Fed's watching. Well, if they watching, tell them I said I'm gonna be fresh to death while they watching. I'm gonna be fresh to death while the Fed's watching. Yeah, hear me. Hey man, let me do this like this and do that like that and do that like that. Okie doke. Now I can kind of see all I need to see. Yes. All right. Okay. Now that I got myself together. Let me say, if this first time tuning in to Tim's Tidbits, please allow me to say, welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say, welcome. But I also want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If by some slither of my huge imagination you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Ain't nothing but a big spot if you don't hablo Espanol. And you are in tune to another episode of the Intraday Price Action Recap. You hear me? What's that, man? Shout out to gang that's in the building, right? I see Jim up in here. I see Lump up in here. I see Yolanda up in here. I see Tish up in here. Shout out Lil Hawk. I ain't seen Lil Hawk in a month of Sundays. I thought the feds had abducted Lil Hawk. I ain't seen Lil Hawk since the election was over. I thought Trump hadn't got hold of Lil Hawk, man. Lil Hawk had then disappeared. Shout out Laverne. I ain't seen Laverne in a month of Sundays. You hear me? Man, shout out to everybody in the gang. Hey, gang. If y'all ducking the feds and Trump, hey, if y'all haven't heard, I'm gonna say this repeatedly. I'm switching the monthly memberships over through. I'm doing it through WAP. I'm tired of paying Google 30%, so I'm switching it over to WAP. If by chance, in the starting today and the near future, if you be going in looking for replay videos and you can't seem to find them, is because I'm switching everything to do it. What's up, Kashaya? I'm switching everything to do it through WAP. And in WAP, it's not an automated process for y'all being able to see the playbacks, right? It's the process of I got to put it unlisted and share the link in the Discord so you can go to those playlists to be able to go back and watch the replays, right? That's how I'm gonna have to do it, setting it up through WAP. But WAP is automated as far as putting you in the Discord and taking you out the Discord. But so for the gang, y'all grandfathered in, and it's gonna be whatever you're paying now. Whatever you're paying now through your monthly what's names. If you join before February 1st, 2025, you're going to be paying whatever you pay now, right? Like I said, I'm not doing the 99s, you know what I'm saying? And I'm only going to have gold, platinum, and minty, right? So it's either going to be 5, 8, or 25, right? But I'm going to add another tier, right? I'm going to add another tier, and that's going to be the diamond tier, right? But I thought about it, instead of doing another boot camp, right? Instead of doing another boot camp in the future, because I don't foresee, I don't think nobody in the gang need another boot camp. But I think the people just like that one-on-one time. So I'm gonna add another tier, right, for anybody now or in the future that want more of that watching the price action time. I'm gonna add another tier that's gonna be the diamond tier, and I haven't decided on the price yet, right? But it's gonna be like a monthly thing and it's gonna be, you know what I'm saying, all the lower tier stuff plus, you know what I'm saying, tape reading 3 days a week. Yes, the tape reading will be yes, the tape reading will be in the morning, right? If we get in there and we have Kashaya, how you read in my mind? How you read? I just said that. How you read in my mind? Right? It's gonna be tape reading 3 days a week. Right? They gonna be on YouTube, but like to get to them, you're gonna have. It's gonna be in the Discord. Right? It's gonna be in the Discord to get to the playlist. Right? In the inside the new Discord. Inside the new Discord, the let me show y'all what I'm talking about. Right. Let me share my screen. Let me share my screen over here. I'll put it on that screen there. So I be trying to put this out when we're like doing pop-ups and doing stuff like that, but don't nobody be popping up. So as right now, right, this is the server now, right? Y'all know how the server look now, okay? And the new server is gonna be the one with Aranya Grande up there. It's got a yellow thing. This old server is gonna be here. The old server is not going anywhere. Also, that's what I meant to say. Inside the old server, y'all grandfathered in as far as what you paying now. Inside the old server is going to be the links for you to join join the monthly subscription of the WAP inside the old server, right? The link that's going to be in my in the chats, and the links that's going to be like in the description of the videos and stuff, that's going to be for the new pricing for the gold, platinum, and diamond. Right now, there's no diamond for you all now. If you want to do the diamond, it's going to be the price. But the gold and the platinum, right, for y'all is going to be the gold, platinum, and minty. For y'all, it's going to be 5, 8, and 25. Whatever you're paying now. If you're minty, you're paying 25. If you're a gold, you're paying 5, and if you're a platinum, you're paying 8 a month. That's for y'all, right? The new pricing for everybody on the outside for the gold is gonna be 15, and the platinum is gonna be 25. So it's 15 and 25 if you haven't been in the gang prior to February 1st, 2025. 15 and 25. 15 for the gold, 25 for the platinum. Right? But everybody else that's part of the gang is still 5 and 8. There's not gonna be another minty tier. Like the minty tier, that's not gonna be another thing. And then the diamond, right? I'm tossing up between the diamond right now. I'm trying to figure out the price on what I want it to be. Right? Right now I'm falling in between the neck of the woods of anywhere from, it's not gonna be more than 50, but it's gonna be more than 25, right? So I don't know if I'm gonna do 30. I don't know if I'm gonna do 40. I don't know if I'm gonna do 50. It's gonna be it's gonna be 50 or less, but more than 25, right? So the gold is gonna be 15. The platinum gonna be 25, and then the diamond, I haven't decided on the price yet, right? And then, but for the old gang members, it's still 5, 8, and then 25 for the mentees. I'm not the mentees. It was, you know what I'm saying, y'all know what the mentee thing is, right? And then so the new server, right? So in the new server, everything looked pretty much the same, except for you see over here, there's not going to be a silver, right? There's no regular voice. It just say I stay popped up, right? We got first Sunday, second Sunday, third Sunday, and Wednesday. Those are the Q&A channels, right? Now, the Q&A is going to be done everything going to be done primarily through Zoom. Everything going to be done primarily through Zoom when we get inside the new server, right? It's going to be primarily through Zoom. For people who like to watch it on YouTube, it still will be streaming to the YouTube, but I'm going to be in the Zoom. I'm not going to be monitoring the YouTube chat, right? I'm going to be monitoring the Zoom. It'll be streaming to the YouTube, but I'm going to be monitoring the Zoom, right? So the Zoom links will be posted in the respective channels, like respective voice chat channels, right? For the different people who got access to those Q&As, right? We still got the Q&A section, right? The homework section, right? I mean, not the study hall section, right? We got like my playlist, right? These are all my playlists that, you know what I'm saying, I suggest people look at, especially the art of reading price action. If you want to be a part of like the mentorship, or if you want to be a part of the diamond tier, ICT content still there, right? All the ICT content still there. And down here, depending on your tier, right, you on the membership tier, you're either going to see gold members and gold replay, right? This is where you get to the playlist right here inside the Discord, right? Matter of fact, I've been changing everything, so I need to paste it. I need to probably put these in the old server somewhere, right? This is the platinum. If you platinum, you'll either say platinum and platinum replay. When you look at the platinum replay, you'll notice that it says platinum tier replays, gold tier replays. That's because you're platinum, so you get to see the platinum and the gold. Anything that's below you, you got access to it. But the way it's over on YouTube, they're in separate playlists. So if you want to look at something that happened during something where the gold members were, you know what I'm saying, all you gotta do is go to one of your playlists and it should be the latest video that's in there that you're trying to find. If you're a mentee, you're either gonna see mentee members or the mentee playlist, and then you'll see mentee tier, platinum tier, gold tier. You'll see all the different playlists for the videos, right? And if you know what I'm saying, you want to see it, you just go, like if you want to look at something that's, if you're a mentee member, but it was something that a gold member had access to, right? It's going to, you know what I'm saying? You can go in any one of the tiers, like from this day once we switch over, it'll be in all the playlists. But right now, if you want to look at the older videos, right, when you click into it, right, it'll be like, you know, it'll be like the latest video that was posted in that tier. You know what I'm saying? They're in order. It'll be the latest one that was posted in that tier. Once we start, all of them will be added to all three tiers, so you can go to any one of the tiers and you will see that video if you got access to it in that tier. But for right now, that's how you get to the older stuff, right? And then if you get into the diamond, then it'll be like either the diamond and the diamond replay, and of course you can see all of the tiers below you, old stuff. Now the only thing that everybody can't see is the boot camp stuff, right? The boot camp stuff, that's just for the people who paid for the boot camp, and it's going to be on the boot camp replay, right? And y'all already know your email got to be connected to see them videos, right? That's the only thing that if you wasn't a part of the boot camp, you won't be able to see these videos right here, right? And that's how the new server is gonna be set up right there. All right. And oh yeah, I said that I'm gonna put a link inside the old server so y'all can get the pricing for y'all, and then anybody who wants to join that's not in the gang now, I'll address them later on. Now that we got that out of the way. Hopefully the next 42 times I got to talk about that, it won't be that long. I already said what's up to everybody. And so let's get into the price action recap. Okay, don't have my trading view open. Let's get into the price action recap. You hear me? I'm sharing the wrong screen. No, I'm not. I'm sharing the right screen. Yeah, I'm sharing the right screen. All right. How y'all doing today, man? We didn't get a chance to chop it up yesterday. So let's just zoom out. Excuse me. And look at them. Well, them levels be leveling, don't it? Them levels be leveling, don't it? Y'all see that there? Y'all see what? Can y'all see that right there? Them levels be leveling, don't it? What's that dotted line right there in the middle of that? Somebody tell me what that dotted line in the middle of that right there. What does that represent?
Consequent encroachment.
Okay, go ahead.
Yeah, consequent encroachment. 50% is consequent encroachment in a fair value gap, right? Right. That's a hourly fair value gap, right? Price started out here, went down there, right? Then price went up to there. Y'all see how that thing stopped right there at that consequent encroachment of that hourly fair value gap there, and came back down and hung out at yesterday's high, went back up to consequent encroachment and came back down right there and closed right around yesterday's high. Look like it closed right at yesterday's high almost. The close on that 445 candle right there was 21,583.50, and yesterday's close was 21,579.75. So 3 ticks of five. Let me see. Yeah, 587.50, and that was 5. Oh no, that's 3 points. 2. I don't know. Close. My math ain't mathing right now. It was close. 445. 3 3/4 points. I said 3, but it's 3 3/4 points away from yesterday's high. All right, so I know some may be looking like, Tim, why did you pick that SIBI as an area you want to see what price did at it? Can somebody explain? What's up, the Russells, hardest lieutenant in the tank in the building? Can somebody explain to me or take a guess at why I picked out this SIBI right here, right? That SIBI right there. What made me want to pick that out as a area where I want to see what price was going to do when it got to it? What made me pick out that SIBI right there? Who want to take a guess? Preferably somebody that's in the Discord that can unmute. And preferably somebody that's listening to me through Discord and not watching YouTube and listening in Discord and listening to the YouTube and gonna wait like 5 seconds before they respond.
Was that what you call it, the first presentation or just the first fair value you got?
What I said, what about this? What made me pick that to see how price was gonna react to it? Why didn't I pick this bearish order block right here? You know what I'm saying? Why didn't I pick this bearish mitigation block right here? Why didn't I pick that fair value gap right there? Why didn't, you know what I'm saying? What made me pick that fair value gap right there?
I'm not sure.
Somebody said it and the gap above it are expansion gap. What is the expansion gap? Oh, you say breakaway gaps? It and the one above it are breakaway gaps. Okay. I'm gonna give Kashaya. It sounds like you're totally guessing, but I'm gonna give Kashaya partial credit, right? Because she said it and the one above it are breakaway gaps, right? I'm gonna give her partial credit, right? I'm gonna give her partial credit, and the reason why I say I'm gonna give her partial credit is because we this right here, right? That right there is, I did it because that was a breakaway gap, and if price is truly bearish, right, I don't want to see price come back to that gap right there until it does something, right? Until it does something. Now, right, since our man-made close stop price from doing anything as far as trying to retrace back to this breakaway gap here, you're right, that is a breakaway gap because we didn't trade back to it. But since the man-made stop like didn't give us a chance to see if price was going to try to touch it and then go down, right, we got this huge gap down because of the break, right? That right there is a breakaway gap, and this is the first time we're trading back up to it. So now I want to see price, if price is going to respect this before heading to that. That's why I picked that fair value gap as what I want to see price do at it, right? And you always want to remember, whenever you're watching price, right? People ask me this all the time. Tim, how do I see it in real time? Tim, how do I need y'all to see what I'm doing with my head, because this is what y'all look like when y'all be asking me this, right? If you on okay, I'm gonna turn it around. So if you on IG, let me flip my camera around. How I flip my camera around? Okay, all right. This how. Come here, Tim. Okay, I'm flipping my camera around. Now, y'all ready? This how y'all look when y'all be asking me, Tim, how do I see it in real time? Tim, how do I see it in real time? Tim, how do I see it in real time? Right? Look like a bobblehead. Your head be bobbling when you ask me that. Right? Whenever you ask me that over and over, your head be bobbling when you be asking me that. Right? So, so for all the bobblehead people out there, this is how you see it in real time. While you're watching price, okay? Matter of fact, I was on a live stream today in another community that I'm a part of, right? And people was in there talking about Michael, and you know how he teaches or talks through price. And they was talking about his new Telegram channel, and it's like confusing to them, or it don't make sense, or he's not really saying anything or anything like that. And I mean, teach his own. If that's how you feel, that's how you feel. But me, I feel like if you understand how to use his concepts, his new Telegram is complete gold. It's pure gold, right? And what you have to understand, if you're going to trade these concepts, this is why I want to know it all, right? Because if you don't know it all, then you're limited in what you can use as far as reading the price if you don't understand it all, right? So, for example, imagine when I'm talking through price and I say stuff that you don't understand, right? Just like today, somebody in the community was like, hey, what makes a fair value gap a SIBI, right? And so the person leading didn't get an opportunity to answer, so I just answered the person in the chat, and I was like, a SIBI is a bearish fair value gap, a BISI is a bullish fair value gap. And then I gave him what the acronym meant: sell side imbalance, buy side efficiency, SIBI, buy side imbalance, sell side inefficiency, BISI, right? And so I thought that was the end of it. But then the person came back and asked me, is a BISI a normal? Is a SIBI a normal fair value gap, or is it something special? Is it something special about can it do more or something like that? Right? And I was like, whoa, buddy, you're overthinking this. I just told you a SIBI is a bearish fair value gap and a BISI is a bullish fair value gap. You know what I'm saying? You're overcomplicating it because it's a different name. You know, you want to make it be super. You want to be fair value gap on steroids because it's a SIBI, right? That ain't what I typed in the chat, but that's what I was thinking in my head. And see, and I said all that to say is because he or she, whatever, I don't know by the name, username, they were totally lost because they heard a word they had never heard before. And they started making it overcomplicated. They started trying to figure out what a SIBI meant and how oh my God, I could use a SIBI. A SIBI gonna make me a great trader. A SIBI's gonna make me never fail. A SIBI's gonna, no, buddy. A SIBI ain't gonna do nothing for you if you don't understand the concepts. And that's the part that people don't understand. They think that just because Michael says, look at something, that means he want price to go there and that's what he's trying to trade. Right? Most of the time, if I ain't gonna say most, anytime he don't have a bias, he'll say, I'm not interested in doing anything right now. Right? If he don't have a bias, if he can't get a clear draw on liquidity, he'll say, I'm not interested in doing anything right now. Right? But if you tune in late, or if you just looking for a signal, you're going to tune all that out. You're not going to hear that he said, I ain't interested in doing nothing right now. Right? And then, how many of y'all put, if you ever heard me say this, put a 1 in the chat. Right? Or if you're in Discord, you can unmute and say, I heard it or whatever. How many of y'all have ever heard me say, allow price to form a range and then wait for price to engage with one side of the liquidity, and then look for signatures to see if it's going to continue or attack the other side? How many times y'all ever heard me say it? Kashai, don't be typing all fast.
Sherwin said he heard you.
Hey, if Sherwin heard me, that's all I need. That's all I need. I don't need nobody else. Y'all stop putting one in chat right now. Sherwin already co-signed it, so that's all I need. Yeah. Now, so dig this. Now, you've heard me say that a billion times, right? You've heard me say that a billion times because I said it here too many times. Okay, so if you understand what it truly means to let the algorithm form a range and then see it engage with one side of the liquidity and see if it's going to continue or reverse. Do you truly know what to look for to make that whole statement be useful to you? Do you truly know what it means? Let it form a range and watch price engage with one side of the liquidity and then give you signatures if it want to continue or reverse to the other side. Do you if you do, put a 1 in the chat. If you don't, put a 2 in the chat. Or say, I don't know. I really think y'all should be putting 2s in there. You know why I think y'all should be putting 2s in there? Everybody putting the 1 in there. Now, I'm not saying everybody, but I should see a bunch of 2s going in there right now. And you know, and who want to know why? Look at Shia. Look at Shia. Look at Shia. Cause I say, cause we ask too many questions. Kashai said, Kobe ain't too many questions. That's why I say it should be. Now, I'm not saying everybody should be putting it to, but I know I ain't gonna call nobody name. But Dutch's daddy, whoever do the Sharoni dance for their daddy can 100% agree with me that they daddy should have put a 2 in the chat. If you got a baby that can do the Sharoni dance, you should have put a 2 in the chat.
Hey, man, we got a lock right here, man. We know exactly what's going on. We just ain't pushing the buttons. We ain't letting them hang like that.
Okay, so
you done drilled it in our heads 100 times.
All right, so for those who don't understand, who don't clearly understand, for those who kind of know, those who think they know, those who teeter-tottering, and those who don't know at all, right? What I mean by that is, okay, let's look at price and talk about it, right? Let's look at price and talk about this. Now, so we're going to let's just come here. Let me see what range this is here. I want to find a good range, right? If we come here, this little range that I just highlighted out right there. Uh-oh, what did I just do? Don't extend. No middle. Change to that color there. All right, so that little range there, that is from $10 a.m. on Monday to 12 a.m. on Tuesday. So that's from Monday morning until that's a pretty big range. So let's just go back right there. Okay, so we're just gonna look at Monday from 9 a.m. right there. So I'm picking that area that's from 9 a.m. to 4 to the end to from 9 a.m. to 4 p.m. right? So we're looking at the New York range. We're looking at the New York range for Monday, right? So since we're looking at the New York range for Monday, let's go ahead and put this in replay and knock off all that right there. And then we're going to drop down to a 1 minute chart and look at that range, right? So we're dropping down to a 1 minute chart and we're going to look at that range. This is the price. This is that price action from 9 a.m. All right. So that's the price action from 9 a.m. Monday until 4 p.m. Like, all right. And so this right here is the 9:30. They're going to put it on 9:30. All right. So that's the 9:30 candle right there. All right. So that we got 9:30 to 4 highlighted. That's the New York session, New York morning session. Okay. Now, let's start at the kill zone, right? We're going to go if you trade based off of the 7:30 kill zone, right? You'll be watching price from over here. I personally like to start watching price at 8:30 because I trade the U.S. Indexes, and 8:30 is when news embargoes lift, right? When the news embargoes lifts. So that's there. Now, so I'm going to do it from 8:30. You just do the same thing from whatever time you're watching price. All right. And if you have a draw on liquidity, right, we're going to look at it in the sense of we have a draw on liquidity. We think we know where price is going to go, right? But we just waiting for our trade in window, right? And see if it hits our target before our trade in window. And then we're going to look at it in the sense of we don't know where price is going to go. right? We don't know where price is going to go, and we're going to just wait for price to tell us, okay? So now, since we got this humongous gap over here, right? We got a super huge gap over here. We don't have really nothing to key off of over here. So we're just going to pick this right here and say that we're bullish, and that's the buy side. We're looking for price to draw toward, right? Because we ain't got nothing to keep with this big old gap, ain't giving us nothing to key off on. So we bullish, and we're looking for it to draw toward this buy side, right? Buy side liquidity, right? We're bullish, and we're looking for it to draw toward that buy side liquidity over there, okay? And then let me turn all this other stuff off. Except I'm just gonna turn on the new week opening gap and the new week opening gap, right? Cause it's Monday, all right. And then okay, you see there that high is like up there toward the high of the new day opening gap. So that's a good reason for us to say, okay, we bullish, because we're looking for price to draw back up into the new week opening gap, right? That was a good pick there. Thank you, Tim. All right, so that was a good pick. So we're looking for price to draw up there, right? So Picasso's up there, and then we're looking at in this right here, we'll just mark this right here as sell side. All right, we'll mark that as sell side, okay? All right. All right, that's our external sell side, okay? Now, this is what price did overnight. Right here, yeah. So all this right here is what price did overnight. All right, so this is our overnight price action here, right? From the 6 o'clock open all the way up into 8:30, right there, right? That's our overnight price action, okay? Now, looking at what price did before 8:30, let's go look at price before 8:30. That's the 8:30 line over there on the edge of the screen, right? So here we are, right here. This is, right, let's find from, this is our London. London opened up right over here, right? So London opened here. This was where London opened, right there on the London. That's where London opened, and then it went up here and did its thing there. The London kill zone opened up over here, 130. All right. So if you ain't got to be super in tune with all of the London kill zone and the London open and all of that right there, right? So this black line right here, right? That's the London open. Right? That's the London open right there. And as we see by looking at that candle, right, from the London open, it never went down, right? So during the actual London session, this is the lowest price that it traded, right? During the London kill zone, you got a lower price down there, right? But price was just running, right? So that's the lowest price that price traded, right, since the London session up until the 8:30 kill zone open, right? Since the 8:30 kill zone. All right. Say, Tim, what are you doing? I don't know what you're talking about. Okay. Let's keep paying attention, right? So this is 8:30, right? This is the lowest price from the London open, right? And then London don't close until 11:30, right? And this is the highest price from London here, right? And it happened at like 6 something, but like during the kill zone up until 5 o'clock, right? This area over here would be the highest price, but you ain't got to get all into the kill zones and all of that right there. So the black lines that's on there, right? This is the lowest price during the London session. This is the highest price during the London session. Right? We got it. Let me mark those out so we can remember what they are. Low. London. I'm going to put regular for like regular session. Okay. Then I'll put high London and put regular. Right? Meaning during the regular session, not focusing on the kill zone and nothing like that, right? Okay. But Tim, why'd you pick that? Because how it traded, right? Because how it traded. It opened here, never went down, and it just went up, pretty much. That's why I picked the lowest point and the highest point during the session. It was just a straight up move from 130 all the way up like that right there. It was just going up. So instead of coming back here looking at the kill zone and all that, I'm just looking at what the London session did. Okay. Now, coming into 8:30. Now we're coming into our time right here. Right. We're coming into our time. And whatever time you start watching price or however you want to break it down or whatever, right? You just pick and choose how you want to do it. So coming into 8:30, right? Right, as you can see, coming into 8:30, like coming, it ain't got to be absolutely perfect, right? But here at 8 o'clock, we went up here, right, above these highs, made a high, right, made a relative equal high, another relative equal high, right, and we coming into 8:30 now, right, and we trading down. So at this point right here, right, you're looking at this swing low right here, right, looking at that swing low right there. Okay, make that to the sell side. Right, looking at that swing low right there because price has gone up, made a high, right? And then price is coming right here and it started to make a low and then it started trading back up, right? It started trading back up, right? Moving back up and we dropped down. So now we kind of going into a range. So at this point right here, right, we can see that price has established a high, right? Price has established a high and price has established a low, right here around this kill zone open, right? The 730 kill zone is here, right? 730 starts there. So we've established a high and a low right there. And then we can even, if you count the 730, right? If you count the 730, you can either extend it down to that low right there. All right, so we got a low and a high. The range has been established from the 730 kill zone, and then it's still intact during the 830 kill zone, right? And then it's still intact all the way over here until 930, right? Well, let's get us a 930 thing, right? So if we come over here, look at 930, right? That's 930. That's the open right there. Okay, so you can see the range that that was established. Okay, going into 930, right? It's still a valid range, right? Because we got the high here. Y'all can't see that line probably. Let me thicken it up a little bit. Thicken this up a little bit. All right, okay. So we got a high there from that candle, from that 806 candle. We got a low here from this 746 candle, and the coming into 930, right? The range is still intact, right? So when we talk about, all right, so now we're going to look at it as we are bullish, right? We're looking at it as we are bullish, and this is our draw up here. Okay, we're looking at it as we are bullish, and this is our draw up there. All right, so if we are bullish and that's our draw up there, this is 930. What do we want to see? What do we want to see before we, get ready to engage? Right? What do we want to see before we get ready to engage?
You want to see price attack the opposing liquidity?
Yes. That's ideal. That's the ideal scenario. We want to see price attack the opposing liquidity. Right? Shout out Lump pulled up with the
Dutchess
hard hit.
gave me that. Dutchess gave me that.
Shout out Sharoni. I do the Sharoni dance when I get it right. Shout out Sharoni. Shout out Kashaya. Said manipulation lower. Right? That's the correct answer. Right? That's the correct answer. One side is not the answer we're looking for because we bullish and we want to see it attack sell side first. That's what we want. Right? Because that's going to give us the best opportunity to engage. Okay? That's going to give us the best opportunity to engage. All right? I'll give you partial credit for one side, and we'll just give you a clap. We ain't going to give you the horn. We'll just give you a clap. All right? So, at 9:30 now, everybody said, because I ain't see no tools until I start saying something. Everybody said they understand what it means to watch price engage one side or another, right? But for those who don't know, since we expect price to come here, right? We want to see a manipulation of sell side before we look to engage, right? So as price opens up over here, let's take some of this off the chart, right? We're gonna take some of this off the chart right here, and we're gonna chop it off right there. That's we chopping it off right there, just so we can make the candles bigger and get some more real estate on the screen. Okay, so at the 9:30 open. Right, soon as price opens up at 9:30, right, we push up here. And remember, this is why we got these lines here. This is our range high. This is our range low. When I say range high, range low, that's the range that that the algorithm established for us to watch, right? We want to see the algorithm engage with one side of the liquidity and let me know. If it engaged with the buy side, do it want to keep going up? If it engaged with the sell side, do it want to reverse and go up? Right? Because we're bullish. That's what we're looking at. If we don't have any idea which way price wants to go, right? You can do the same thing we're doing now, but you want a little more confirmation. All right. So right now we're looking at it as we're bullish. And I got a one-on-one at 8, so I can't be talking too slow. All right, we're bullish. And so now when price opened up, right? When price opened up here, y'all hold on. Let me get a drink of water. When price opened up at 9:30, we came up and we traded above.
They got in.
They got in what? Traded above this consolidation right here, right? Traded above that consolidation, wicked off of it. Okay. Now, looking at this, right? We're bullish, right? We're bullish and we want price to go up there. But when we go above this right here and wicked off of it, is this our range that price established? No, it's not. That's our range right there that price established. Okay? That's our range right there that price established. Okay? So now, coming as price went above here and wicked off of there. All right, we say, okay, we wicked off that. Then we opened up here. And then we drop down and swept under there. Got a strong rejection off of it. All right. So is this sell side that we went up under, is that our range that we was looking at? No, it's not. All right. So at that point, Matter of fact, let me do this right here. Trade it above here. Make that green to, we're gonna dash it. Then we trade it below here. Make that red. Right? So is this buy side the buy side that's our range? No. Is this sell side that's our range? No. All right. So right here at this point right here, should we be looking for any PD arrays? Should we be looking for any order blocks? Should we be looking for any fair value gaps? Should we be looking for anything? Nope, we shouldn't. All right. We shouldn't be looking for anything. All right. Now, once we got this rejection off of this right here, right, we span up and we create a fair value gap right here. All right, we create a fair value gap right there. Come here. God dog it. All right, why is that on 928 counter there? All right, create a fair value gap right there. Right, that's the 931 candle right there. That's our first presentation. Bullish fair value gap, first presentation. Okay, I'll just put it right there. Bullish fair value gap, that's our first presentation fair value gap. All right. For anybody who don't know what the first presentation fair value gap is, it's the first fair value gap created after, like, from 931 or later. Right, so that's our first presentation fair value gap right there. Right, because that's our 930 candle there. I don't know how it got over there, but that's our 930 candle right there. Okay. So now here we got a first presentation fair value gap. We come up and we hit our buy side liquidity. Right? We hit our buy side liquidity that we're watching. Okay? And we're bullish. Okay? We hit our buy side liquidity that we've been watching and we're bullish. All right? So, now that we've hit our buy side liquidity, right, and we created our first presentation fair value gap, right, now, at this point here, all right, should we be looking for any reason to trade after hitting our, our buy side liquidity, right, creating our first presentation fair value gap? All right. Should we be looking for any reason to trade? Yes or no? Chat should be flooded. I saw a whole bunch of ones. No. Shout out Tish. First one pulled up on the no. Sonia, Lil Hawk, Calio, Hitler and the Chef. Shout out to everybody pulling up with the hard hitting answers, right? No, we should not be looking for anything to do right now, right? Several reasons, but just to give you a couple, right? One, we're still inside the opening range, right? We're still inside the opening range. The opening range runs from 9:30 all the way over to 10 o'clock, right? The opening range, this area here that I've highlighted. Let's highlight it, that purplish color right there, right? That opening range right there, right? That opening range there, that's the opening range. Okay. One, we're still inside the opening range. All right. One, we're still inside the opening range. Two, right? Two is because when we engaged at the buy side, we got a nice little rejection off of it, right? One, we inside the opening range, right? The opening range, you want to give the algorithm time to establish itself, right? You want to give the algorithm time to establish itself inside the opening range, right? So inside this little window right here, we're trying to let the algorithm establish itself, set the tone, give you some type of idea of how you want to engage the market. All right, that's reason one. Reason two is when we hit that buy side, we got a nice little rejection off of there, right? And whenever you reject a high or low, right, it's reasonable to anticipate price to draw back to the higher low that sent you there, right? Does it have to get there? No, it doesn't. What do you want to look for to see if it should get there? You want to look for PD arrays that's supposed to stop it from getting there. In this case, right, we got a first presentation. We got an order block, right? So we got two pieces of algorithmic real estate that should stand in the way of price coming down there. Okay. So if you're bullish, right, you want to see discount PD arrays support price, right? Without fail. You want to see if it's going to be a low resistance liquidity run, you want to see them support price without fail. And what do I mean without fail, right? Can somebody explain to me what I mean by without fail, support price without fail, or resist price without fail? What you think that mean? What do we say about PD arrays when price trades into them? What do we want to see?
You want to see them respected.
Respect. What do we want to see though? What's that respect? What are we looking for?
Discount PD arrays, you want it to support price going up.
No, I'm saying, but when it get like, what are we looking for to know that it's respecting the price? Right.
Immediate reaction.
Immediate reaction, but what does that mean? Like how? What's immediate? Give me something. Give me something quantitative. Immediate can be different things to different people, but quantitative. When it get there, you want to see it do what? Respect what? 25%. Shout out Rhonda. You want to see ideally is respecting 25% at the most. You want to see it respect 50%, which is going to be consequent encroachment or mean threshold, depending on what the PD array is, right? So you want to see it in low resistance. You want to see it hit respect 25% at the most 50% and get it gone, right? You want something quantitative so you can understand, because respect can be different to different people, right? Okay, so you want to see it support price without fail, right? So and that's indicative of low resistance. So as price hit this buy side here and starts to trade back down, right? When we get back to that first presentation fair value gap, right? You're watching to see how does price trade at that first presentation. This is what it means when you're watching price engage with the liquidity and how it reacts, right? So we see a strong reaction off of the buy side, right? And then when we come back down, we see it disrespect the first presentation, right? So this was the first PD array that it touched and should have got up out of there, but it disrespected it. It traded and closed below it, right? And then it opened up and it traded all the way below the closing price of this order block, right? Yes, it came back up and it closed above the order block and above the first presentation fair value gap, but that right there is showing like high resistance or weakness of the buying of the bullish sentiment. Why? Because what's signatures for high resistance? Overlapping candles and deep retracements, right? And look at all the candles up until this time thus far, right? We've had a lot of overlapping candles and deep retracements, right? That's a deep pullback right there, right? Came up here all the way back down there, right? This is when we took off, right? Came here. Let me move this 930 line there so we can really get a good look, right? We dropped down, took out that low, right? Pushed up, and we traded all the way back down to here, right? Dropped down, hit the low, came up, pulled all the way back to there, okay? All right. I'll just put it there for now so we know that's 930 right there. Okay, so showing weakness right here. All right, traded all the way below the low of that. I mean, below the close of that order block. Might have tapped it to a tick. Let me see. 26, 25. Nope, one tick below. Right, the low on this candle is 206 even. The low of that, I mean, the close of that order block is 206.25. So it went one tick below the close of that order block. Again, pushing all the way through the body of this order block, showing weakness. It's shoving all the way through. It should have just tapped it and got on up out of there. Okay, so then we push back up above this high. Right, we push back up above this high right here. Okay, once we push back up above that high right there, this next candle comes down and trades into that candle's wick, right? Signifying a possible immediate rebalance, right? The next candle opens up, trades back down, right? Doesn't make it to the first presentation fair value gap. Then it comes back up and closes right near the buy side that we was watching. Okay, still a lot of overlapping candles, right? These candles are overlapping. We just watching how price is delivering, right? We're getting a lot of overlapping candles. See, we stretched out here, right, with the possibility of making a BISI this big, and then we came back down and traded into that wick, right? Showing signs of a possible immediate rebalance, right? But then we came here, right? We opened up here and dropped all the way back down again below that candle's low, right? Not really showing a desire to really speed away. But then on the next candle, we did get a pretty nice little move away. And we created a fair value gap there. Okay? Right? Created a fair value gap there. Now, at this point, right? Let me put it like this right here. And I want everybody to be completely honest with yourself. At this point right here, and be honest with yourself now. At this point right here, how many people would be looking to trade off of that fair value gap right there if price came back down and traded into there? All right, how many people will be looking to trade off that fair value gap right there? And then I'll tell you why I'm asking this in a minute, but be honest with yourself. At this point right here, how many people would be looking to buy off of that fair value gap right there? Shout out Thomas pulling up with the hard hitting honesty. He got his hands up. He say me, I would. Who else? Not because you see what price did, but just honestly speaking, if you was watching price right now, would you be trying to buy that fair value gap right there? Right. Shout out to everybody putting up their hands saying, yes, me, I would. Right. And old little Timmy Rogers, I would too. I would be looking to buy that right there too. The old me, the old little Timmy Rogers, I'll be looking to buy that. Right. Let me give you the first reason why I'll be looking to buy that. Who can tell me what this is right here? Who can tell me what just transpired right there? 930, we traded below that low. We displaced up and we created a fair value gap right there. Somebody tell me what that is right there.
What, the expansion part? You want to know what that is?
This what transpired. This whole thing here. You probably ain't gonna know this one, right? We took out that low, displaced up. There you go, right there, JMC. Shout out JMC pulling up with the hard hitting answer. That's the ICT 2022 model. That's the 22 model. You take out liquidity, you expand back above. Some, like, you take out sell side or buy side. This case, sell side. Take out sell side, it displace through buy side, create a fair value gap. When you trade back into that, you looking to buy. That's the 2022 model all day long. All day long. That's your 2022 model. Right? Now, the only difference between the 2022 model and the silver bullet model, you just move all of this over between 10 and 11. Right? The same thing. Attack liquidity. Right? Break structure and trade back down into a fair value gap. That's the silver bullet. The silver bullet is just within a different time window. Right? But that's 2022 model right there. So old little Timmy Rogers would be looking to buy that. Why? Because I was just a little pattern trader who, Michael said, you engage liquidity, displace up, create a fair value gap, trade back into the fair value gap, buy it or sell it. All right. But right now, what did we say we were? We said we were bullish. And what did we say we want to see price do? We want to see price engage with our sell side liquidity. What Timmy engaged with, let's sell side liquidity. Not our sell side liquidity, right? That was our range right here. Remember, we had a range that we was watching, and we wanted to see price engage with this sell side before we look for a reason to go up there and attack that buy side up there, right? Does it have to get there? No, it don't. But we want to see price engage that sell side before looking for a reason to engage that buy side. Okay. So we haven't engaged our sell side yet that we wanted to see price attack. Why do we want to see price attack that sell side? All right. Because like we said, that was the range that we wanted taken out because we've been bullish all night long. Right? We've been bullish all night long. And we haven't really engaged, and we ain't engaged this sell side. We engaged that sell side. We engaged that sell side. We engaged that sell side. Right? We ain't engaged that sell side. That we can just keep going. Right? We ain't engaged no sell side. Right? Coming back. We did hit that sell side there though. We ain't engaged no sell side really. So now this is the sell side we want to see attack before we went up. Right? That's why we're still not looking for anything. We're still watching to see what price wants to do. All right. So now that we've created this fair value gap, now we're watching that fair value gap right there. And for those that say, Tim, you didn't mark that right. Yes, I did. We have a volume imbalance there. You want to include that volume imbalance right there. Unless that wick trades all the way down, is like all over consequent encroachment, right? You want to include the volume imbalance. Now, don't ask me why sometimes Michael will go back and forth and say, include the volume imbalance. And it's got this stupid long wick. And sometimes he'll say, include the volume imbalance, but don't include it if it's down over the wick. I don't freaking know. All I do is I include the volume imbalance unless it's got a super long wick, and then I just put it to the wick. That's what I do. Right? I'll let him come out later and explain why he changes it sometime. So we got us. Now, what we're watching is, does this fair value gap support price? Right? Does this 1 minute fair value gap support price? And what do we say? How do we want to see it support price? Right? We want to see it hit that top 25%, no more than 50% on a closing basis, and get it gone. Right? Now, we'll put some more meat on the bone because we said we were stopping it. Where we cut it off at? We had cut it off right down here somewhere. That's where we cut it off, down here. Right? so we can look at the price without it. So then we come in and we see here when we trade into that fair value gap, right? We dip all the way down into the lower quadrant, and then we close just above consequent encroachment, right? Still doing its job, but looking a tad bit weak, right? Because we traded so deep into it, but we still closed above that London high, and we closed above consequent encroachment, right? The next candle here, we traded all the way down outside of it, right? And we came back, we closed above consequent encroachment, right? This next candle here, we traded all the way back down almost to the low of it, right? Still closing inside of it, right? Next candle here, we traded out of it, we traded down to the low of it, we still hanging inside this fair value gap, not showing a willingness to want to get away. This next candle here, we close down, poke outside of it, and then we close below the lower 75% of it, right? So we're really starting to disrespect it now. All right. And then on this next candle here, right, we leave it, right, aggressively, right? We leave it aggressively. And now we're coming back down to this first presentation, right? Same thing with the first presentation. We are looking for, right? Price has gone up, right? Price has gone up above the buy side that we were watching. Okay. Started coming back down, right? It has disrespected the fair value gap, right? Now, since this fair value gap, right? We're watching to see if price respects this, right? But because of where this fair value gap is, what are we anticipating about that fair value gap? Right. Because of
It's
where, go ahead.
it's going to become an inversion fair value gap. We're going to
Very,
use it as an inversion.
very good. Hey, Sherwin, thank you for helping helping Deborah out. Right. We're anticipating it to become an inversion fair value gap. All right. So since we're anticipating it to become a inversion fair value gap, we want to see it fail. Okay. So now we've come down here. This candle here closed below it, giving you the inversion fair value gap. Now this candle closes with the possibility of making a SIBI this big. Okay. This next candle pushes down, right? We got an expansion candle here now, right? So now we got an expansion candle there, right? And we got our bearish fair value gap here. Okay. We got our bearish fair value gap here. All right. What are we anticipating about that fair value gap right there? Right. This candle came down closing with the possibility of making a fair value gap this big. And then we got this expansion candle here creating a fair value gap that big. What are we anticipating about this fair value gap right here?
To be a breakaway fair value gap.
Yes, we're anticipating it to be a breakaway gap. Right? We're anticipating this to be a breakaway gap. Why are we anticipating it to be a breakaway gap? Help out, Sherwin. Put a question mark there because we don't know. We waiting to see if that happens.
Mm-hmm.
Right? That's why I got the question mark there. We waiting to see if that happens. Breakaway gap? Question mark? Okay, why didn't that move? Okay. I thought that was gonna. Okay. It don't want to get off that line. So I have to make that line That line is getting on my nerve with that line running through the words there, but it probably don't bother y'all, right? Why we? What? Somebody help out, right? I see a whole I see a bunch of people saying breakaway gap. Why are we? I got 40 minutes before I got to get on a one-on-one. Y'all talk to me. Why are we anticipating this to be a breakaway gap? Because what? Let me help you out right here. I ain't got a lot of time. Why? Why? What am I pointing at right there? What is this? What's this right here? The 946 candle. What is that right there? The third candle is an expansion candle. Very good, Tish. Very good, Tish. The third candle is an expansion candle. So when you get an expansion candle on that third candle, right? If it's going to be used as like an ICT breakaway gap, right? That third candle being expansion candle, you want to see it act as a breakaway gap, right? And what constitutes a breakaway gap, right? Either not trading to it at all or trading to it and getting the institutional order flow entry drill, just like we did here, all right? So this ain't happened yet. So we want this to be a breakaway gap, right? And now we're watching this to see if this is the first presentation. Remember, that was our first presentation. We're watching this to see if it wants to support price, right? Why is that? Because, right, we expanded, we came above a London high, and then we rejected back below it. So now if we reject a high, right, you look to go to the low, right? There's the London low down there. We're rejecting a London high, so it's possible to go to the London low, right? That's the high, that's the low, right? Just like when we reject a high, it's a possibility of coming back to a low, right? And you don't have to get there, but what's in the way of stopping you from getting there? Okay. What's in the way of stopping you of getting back to the London low? All right. You have that. You want to see it turn to an inversion fair value gap. It turned into it. Right. Remember, we're bullish. Right. And if we're bullish, what do we want to see? We want to see price come into our sell side that we wanted to see get engaged. Right. So now you're using price, a light bulb from the click for somebody. You're using price. You're watching the PD raise to see if it supports your thesis. Your thesis is attack this sell side, then give me some kind of reason to buy back up toward that buy side up there. That's your thesis. So now we've took out this sell side here, attacked that buy side, pulled back into the range, hit that order block, went up, attacked the London high, right? Rejected the London high, right? Now, inversion fair value gap as we anticipated, right? Created a SIBI, right? We're traded back into the first presentation, right? Because we wanted this to be an inversion. We wanted a SIBI here. We want this to fail because we want price to draw back toward this London low. Okay, we want this to fail, right? It fails. We close below it. Now that we got this expansion candle and we close below it, we want this to act as a breakaway gap, right? Once we close below there, got that. Now we want it to act as a breakaway gap, right? Price comes down, right? Trades back above. First of all, we want to see the first presentation, see if it's going to resist price, right? Because we want price to come down to that London low. All right. So we get below it. We trade right back above it. We trade right back below it, right? We're just doing at this first presentation fair value gap, right? Now, this right here starts the macro time. All right, your macro window opens here. over here to 1010. Right there. Right, this is our macro time here. Let me change this. Macro time here. All right, that's our macro window. That's our macro window right there. Too many words up there. Put it on the bottom. All right. Okay. Now, we're coming into our macro window right here, right? When I say light bulb should be going off for some people right now, it should be going off for some people right now. All right. So we're doing at the first presentation fair value gap, right? Right. What are we looking for? We want to see if the first presentation is going to act as resistance to push us down toward that London low. Why? Because we rejected the London high. Okay. So we do in there. We come into the macro window, right? What is the macro window's job? To spool toward what? The macro's job is to spool toward what? Liquidity or imbalance. Very good, Tish. Liquidity or imbalance. That's the macro's job. It will spool toward liquidity or imbalance. All right. So now, price, we're here. We're right here when the macro opens. Okay. We have minor sell side here. Right. We got minor sell side resting here. Okay. We got our sell side that we wanted to see price engage before looking for anything as far as do we want to get in. And then we have the London low that we're looking at as a potential draw because we rejected the London high. All right. So when the macro window opens, right, price drops down below this low there, right? I don't know if it touched that first or touched that first, but anyway, it went down and it touched that again, closed there, then it opened up, wick down, and now it's going toward the breakaway gap, right? It comes up, touches the breakaway gap right there, barely touches it, okay? Barely touches it, and then it drops down immediately and attacks the short-term sell side. Short-term sell side, right? So it goes up and then it immediately drops down quick. Boom, takes out the short-term sell side. When it takes out the short-term sell side, it turns back around, closes back above the first presentation fair value gap, goes all the way up to like the upper quadrant of the the breakaway gap we was looking at, traded back above that old buy side liquidity and into this bearish order block right there from 938. That's also the candle that created that inversion fair value gap. That was that inversion fair value gap that we want to see, right? So we trade back up into the upper quadrant, into that bearish order block, and then got a nice rejection off of it, closing all the way back down below the first presentation fair value gap again, right? So at this point right here, right, this is the macro window, right? And when we come down here like that, boom, hit that sell side, go up there, boom, right, go to that fair value gap that we looking to be a breakaway gap, right? And then we reject off of it really hard there, boom, drop down, right? Now we're just looking at what? A bunch of overlapping candles, right? So that's what? High resistance. But what signatures is it showing? It's showing respect for that breakaway gap. Wicks do the damage, bodies tell the story, right? Everything is closing well below the 50% of that breakaway gap. So it's still holding true. Very high resistance, bunch of overlapping candles, but it's still respecting it, right? And so we close below the first presentation again, right? Go and close right back above the first presentation again. And then it come back down and close below the first presentation again. So we just back and forth, back and forth, back and forth, right there hovering around that first presentation. All right. So then we come here and we drop down one more time, come extremely close to that sell side and reject back up. Right. That's the last candle. That's the last candle of the first half of the macro window right there, right? That's that right there. Well, this is the first candle of the second half of the macro window, right? Because the macro window go from 950 to 1010, right? That's the 10 o'clock candle right there, right? So that's the end of your opening range, right? This right here, this candle here is the end of your opening range, okay? So now that we took out that minor sell side there, right? And then that gave us our lowest low of our opening range right there. And we traded back up into the first presentation fair value gap, ended the opening range here, right? And so now we have our highest high of our opening range there. And we have our lowest low of our opening range there. All right. We still haven't engaged our sell side yet, but now we trade back up into that first presentation, not that first presentation, the breakaway gap, right? Hang out there for a second. And then as soon as the opening range closes, we come down immediately and take out the low. Right, we take out the low of the opening range, indicating I want to go that way, but not just yet. Right, I want to go this way, but not just yet. So what is above price that can stop us from getting back to the high that sent us there? Right, we got the first presentation fair value gap right there. This candle here closing, right, with a possibility of making a SIBI that big. Okay, the next candle opens up, we trade back up past the volume imbalance into the body of this candle, coming right there almost at the first presentation fair value gap, drops and comes down, indicating a good sign of a possible immediate rebalance, because we traded back into the candle and then dropped drastically away from it. So we're looking at this as a possible immediate rebalance, right? Price is moving so fast that the next candle opens, right, with the possibility of making a volume imbalance, right? I say possibility because when it opens, if it closes up, then it won't be a volume imbalance. But it closes down, it'll be a volume imbalance. Next candle opens up, trades down, back below that low of the opening range and below the new low that we created, right? And then engage with the sell side that we were looking at, creating a bearish fair value gap right there, right? Trading down into that sell side. Now, because I don't have much time left and I got to get ready for this one-on-one, this is what I mean when I say that you want to watch price and see how it reacts at the different points, right? You want to see how it reacts at the different points to support your support or invalidate your thesis, right? So every step of the way, right, you want to watch price to see if it's doing what you want it to do, to give you an opportunity to trade the trade that you want to take, right? Let's go ahead and put the meat back on the bone so we can wrap this up and see if we got any questions. All right. So here we go. We're coming here. And as we see price, what did price do? Right. Once we came down here and engaged that right there, right? This was the liquidity we was looking for price to engage. Okay. Once we engaged it, now we're looking for a reason, right? We're looking for a reason to look for a buy, right? And since we were this right for this, from this move here coming down, right? What was our potential draw? The London sell side, right? This was just our liquidity that we want to see it engage before we look for a reason to go long, right? So when we touch that there, now we're activated to be looking for a reason to buy now because it hit our sell side that we wanted to see it touched, right? But remember, when it hit our sell side, the draw at this time, the most likely draw at this time was the London low. We said that from back over here, right? Was the London low. So when we got here, now, once we've engaged here, you want to look for reasons to see if price wants to continue to engage this, right? And when you're looking for those reasons, you're looking at everything, how we had this 1 minute fair value gap that we said we created here, right? You want to see that get respected, right? At 25%, no more than 50% to continue down, right? You see here we close above 50% off the rip. We close above consequent encroachment off the rip, showing weakness of this fair value gap. And we traded all the way up to that volume imbalance right there, right? Traded all the way up to that volume imbalance, then wick back down, closing above there, right? This candle opened up, traded up, and then we closed outside of it, right? Still high resistance, a lot of overlapping candles. Closed below it, came back up, closed above it, right? And then going into the last candle of the macro, closed back above that high right there, short-term high there, and closed back down again. Soon as the macro is over, right, we got a bullish fair value gap right here, right? And then we immediately create an inversion fair value gap, drop back down, immediately create an inversion fair value gap as soon as the macro time is over, right? So we create an inversion fair value gap inside the macro, right? And then we come here, and then price eventually gets down to that London. So now you've hit the sell side after rejecting the buy side. So right there, as you hit the sell side after rejecting the buy side, right, this was our liquidity that we want to see price engage with before we look for opportunity to buy, right? So right here with all this back and forth, back and forth, back and forth, right, when we leave this area, right, all of this now is what? A balanced price range, okay? It's a balanced price range. We engage with the liquidity that we want to see it engage with. We reach the sell side target from this rejection right here. We are bullish, right? So now we're looking for reasons to buy. When we hit the London low, what does price do right here, right? In reference to that, what does price do right there? Somebody tell me while I stretch this out.
Cut through it like butter.
Price cut through it like butter. Now that price cut through it like butter, remember our old friend, right? This bearish fair value gap that we want to see if it was going to keep price down, right? We have now made that an inversion fair value gap, right? Not only did we make that a reclaimed fair value gap. I said inversion. We've made that a reclaimed fair value gap because we got up on, no, that's the inversion. I'm sorry, I said it right the first time. We made that an inversion fair value gap, and we made this, if I can get it, we made this a reclaimed fair value gap, and we made this an inversion fair value gap. So we did a lot of stuff right there with that one candle, right? So you created an inversion fair value gap. You did all that. But if you notice over here, this fair value gap here that we was watching as the SIBI that was going to push price down. We want to see if it was going to push price down or support price, right? We got above it, created an inversion, quickly came down, took out the low. Then we came right back and made it an inversion again. So right here at this time, you're cutting through this like butter, right? Price drops down here to that inversion fair value gap. That right there can be your buy. Why would that be your buy? Because you got a high, a low, right? And now you're trading back up, right? We're trading back up, so we're anticipating a breaker right here. What's in the leg of that breaker? An inversion fair value gap right there, right? What do we like to see if we're going to try to trade off a breaker? Price to come back down to that inversion fair value gap in that breaker leg. What's in confluence with that breaker? That inversion fair value gap that we were keying off of here to see if it was going to support price to take us back up, right? We want to see that support price to take us up. It didn't support price there. Why? Because price was still coming to the target from this time here. Once it got to that target, right, now there's that inversion fair value gap, boom, for you to buy off of to take advantage of going toward your target, which is up there, right? And that's how you watch price to see if it's so if anybody was to be listening to you or watch you watch price, they would be questioning, well, why are you looking at all this bearish stuff and saying you want to see it push price down there if you're bullish? Because they don't understand how to trade the concepts. Or they'll come back later and say, oh, Tim was bearish all day and price took off to the upside, so he was wrong. Because they don't understand how to use the concepts or why you're watching price, right? And that's the same thing a lot of people do when they hear Michael talk. They think just because he's looking at this, that means he's bearish, or just because he's looking at buy side, that means he's bullish. You don't understand why he's looking at it. You need to know, why am I putting that on my chart? Why am I looking at it? How am I going to use it in these, in my pursuit of making an entry? All right. And then the reason why I said light bulb should be going off for people over here, because if you don't have a bias, or if you got the skill to trade against the grain, right, at this point over here, right, and we create this inversion fair value gap, right, you could be looking for a reason to get short, right? You can look for a reason to get short there, scalp back to that low right there, right? Or you can wait till it take that low out, then trade back to the breakaway gap, right? And then scalp back to that low or to that low. You know what I'm saying? That's how you can trade against the grain or trade without a bias, because now you know we've engaged this London high and rejected it. So now price can likely want to draw back to here. And since I have sell side liquidity here, I can scalp to that, right? Once I touch that and I trade back here, I got sell side liquidity there. I can scalp to that, right? Leave a runner to see if I get there. This one over here, if you scalp to there and leave a runner, you probably got stopped out here in profit, right? Or at break even or somewhere. And if you scalped here to there and left a runner to get here or there, right? Your run either made it, might have got stopped out in profit, but that's why I said light bulb should be going off for some people when we was over here looking at price as it was coming down. Now, I got about 16 minutes before I got to get on this 101. Do anybody have any questions for me? Sherwin, you got any questions, Sherwin? I know your sweetie got all the questions, but I'm just trying to see.
Sure, one is good.
All right, man. I don't hear nothing, so I'm gonna go ahead and call it there. Again, remember, I'm switching over. I'm switching over to WAP for the monthly memberships. If you're in the gang, don't use the link that's going to be like in the description. Don't use the link that's going to be like pinned to the chat. That's going to be a link with the new pricing. Unless you just want to use it. If you say, hey, I get down with Tim, I appreciate all the game he been giving, I'm just going to sign up under the new pricing. I feel like it's well worth it. Hey, I ain't going to block my blessing. Right, but if you want to get in with your grandfathered in price that you're paying now, except that extra penny, I'm not doing the 99s. Then use the link that's going to be inside the old server. And like I said, the old server is going to stay active as long as I got a Discord up. It's going to be there. I'm going to stop being active in there after March the 1st. March the 1st is the last day that I would be tapping into that. I mean, February 28th is the last day that I will be checking anything inside that old server. The old server would just be there for anybody that want to go back through the chats and look at stuff, or anybody that want to get access to the WAP link for the what's the name? But after March the 1st, they ain't gonna do you no good anyway, cause the WAP link ain't gonna be in there after March the 1st. Cause I don't want nobody who think they slicking in a can of oil to come in and join through YouTube just to get into the server, to get in there to the old pricing links, and then use that to get into the new WAP channel, the new one on the old pricing. You ain't slicking in a can of oil, because after the 28th of February, the links won't be in that old server. Where will the conversion take place after? What you mean where? Oh, conversation. Where will the conversation take place after March 1st? What conversation? It's gonna be just like it is now, except for after March the 1st. Well, probably before March the 1st, but definitely after March the 1st, it's gonna be just like it is now, except for I'm gonna be interacting through Zoom. I'm not gonna be interacting actually like how I be in the Discord and in YouTube, right? I'm just gonna be in Zoom. You know what I'm saying? I'll be in Zoom when I'm doing like the streams, and well, I'm gonna be paying attention to the Zoom, should I say. I may still have like the Discord open. You know what I'm saying? I may have the Discord open just so I can get my soundboard and I can hit that, you know what I'm saying? But it's gonna be just, but you're still gonna be able to look at it on YouTube, because it's gonna be streaming to YouTube just like it is now. You know what I'm saying? Just like now, whenever we do stuff, and like some of y'all be on YouTube and some of y'all be in the Discord, it's gonna be the same way, except for I'm just not gonna be tapped in to the YouTube chat. Because when I have the Zoom up, the Zoom like super busy. It's like too much stuff going on my screen to be trying to look at move the YouTube chat around and move this around and all that right there. No, the you have access to the streams in YouTube. Yeah, you have access to the stream in YouTube. You don't have to be, but if you want to interact as far as like chatting or talking, you know what I'm saying? It's gonna be like inside the Zoom. But like for people who like to watch it on their TV, you know what I'm saying, through YouTube, it'll still be it'll be the same way. It'll still be the same way it is now. All right. Y'all got anything else? Anything else? Did y'all get anything out of this? Did y'all get anything out of this tonight? Was this helpful? Was this helpful? Did anybody find value in this?
This was very helpful, Tim. Thank you so much.
You're welcome. You're welcome. All right, man. If y'all found value in it, man, hit the like button, share it with somebody who you think might get value out of it also. And tomorrow is Wednesday. Yes, tomorrow is Wednesday. So let me see what I got on the calendar. Tomorrow is the 5th. All right, I got another one-on-one at 8. So I'll see y'all for the I appreciate that, C-Walk. I'll see y'all for the man, what in the world just happened? How I get back to December? Yeah, so I'll do a price action recap tomorrow. Tomorrow probably just gonna do like a regular price action recap. Cause I got a one-on-one tomorrow. I got a one-on-one Thursday night. These all the boot camp one-on-ones that we doing. The boot camp over, but hey, it ain't over. It ain't over for your boy yet. All right, so I got one-on-ones to do tonight, tomorrow, and Thursday. So I will be doing a and then tomorrow night I got Q&A at 7. I don't know. I might still do a price action recap. Got a price action recap at 6, Q&A at 7, and then a one-on-one at 8. I don't know. I don't want to say yeah, and then I'll be like, man, I ain't doing no price action. I'll do a price action recap tomorrow. Y'all, I got love for y'all. Y'all got love for me, so I got love back. You hear me? Anyway, I'll see y'all tomorrow at 6, man. Get me a sip of water. Get ready for this one-on-one. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that they call price action. It's your boy, Aranya Grande. That's just Big Spot if you don't all bless, man. Yo, y'all be safe out here in these streets, man. Gone.